States like Ohio, Virginia, Tennessee, you guys are all starting to see your lower cost initially insurance policies. You're going to see about a 20 to 27% increase. We've got a new article from Yahoo Finance, and I actually agree with this one as far as the impact that you're going to see coming up in 2025. This is kind of that too little, too late scenario where the pandemic happened, all of the things happened, and because of that, inflation hit. Drivers started driving really crazy all of a sudden. We didn't know how to drive after everything was done. Cost of car parts, cost of repairs, all of the things have increased. In states like Virginia and Tennessee and Ohio and all those states, but mainly Virginia we're talking about, didn't see as big of an impact as other states have. Now, don't get me wrong, there are some states like California and Texas that got cut off, like Florida. There's states or companies that left the state and went insolvent. So they're essentially bankrupted their companies because of the scenarios. They're the ones with the weather-related claim. The thing about Virginia that you don't realize is there are weather-related claims that have happened more than normal. So it's not that you're paying for the California or the Florida policy owners, you're actually paying because of hail damage. Hail damage has become a larger impact in your state more than other states have been. And the weather just plays a factor. It flows up, there's hail damage, there's more car accidents and car claims, and it just becomes an issue. That's not the only reason that we're seeing the rate increase, and we'll dive a little bit further into some of those, but also how can you fix that issue? Let's get the numbers. The neighboring state is Maryland, and this article goes really in depth, and I love the fact that it does because Maryland is one of the more expensive states that you're near. They're averaging $3,400 a year for a full coverage policy auto insurance. That year is quite a bit, where you guys are actually averaging closer to the $2,000 mark. So if you're paying anywhere from 120-ish on up, then you're probably paying a little bit too much for your car insurance. That being said, it increases 20%, so you're going to see a $20 to $30 bill added to each policy. Going back to what caused that, 11.8% of that was due to hail damage. That is one of the major factors that you're seeing the increase from those scenarios. But Mark, wait, don't they plan for all of those things? The last 2 years have been a failure. Predictive models just didn't think the weather was the way it is now. And most companies held on and said, no, we can get through this, no problem. But then they lost money over here, they lost money over there, and then all of a sudden everything went haywire. So it was the predictive models being wrong, the cost of all of the things we mentioned, right? The things that ended up being to the point we're at now, where we said too little, too late. Now the prices have to adjust to get back to where they need to be. They're playing catch up. That's really the answer, is they're trying to catch up to what they've held on to too long for, where it should have gone up 3, 4, 5, maybe 8%. Now it's to the point where it's like, now we need 20% or 27% in your case. So what can you do to fight that? There's a couple things that you can do with your current policy. The first thing you're going to see in every single article under the sun is to shop around. Yes, that is an answer, and probably the most accurate answer. For example, we work with multiple companies. We've added Geico, Progressive, we've added Nationwide and Allstate, and all of the companies that we think are competitive in each state. So in those cases, having an independent agent that can look at all those different options, see what coverages you are, make sure it's a fit for the right company, and then the pricing will adjust itself to make sure it's the right fit. When we know that this profile for this person is this risk, each company wants different levels of risk. And when you can put the right person with the right company, that makes a difference. The cool part is some of these companies have already had their increases. So when you are shopping and you're looking at different options, you're seeing companies that are already competitive with the higher rates. So when you have that right fit, like we just talked about, you may even get something that can be a long-term solution rather than just bouncing around from company to company, avoiding the 27% increase that's coming. By the way, if you are shopping around for car insurance, I'll put a link in the description below where you can work with an independent agent that shops it at those multiple companies. So you can take a look at what's a fit for you to make sure you have the right coverage, but also the right pricing that fits the budget that you have. The other parts that you can do is take a quick glance at your policy. Do you have too much? Do you have too little coverage? What is the policy like? I'll link a video at the end that goes more in depth on the car insurance levels that I would typically carry and give you an idea of what coverages are available. The pieces that a lot of people don't see as the deductibles tend to play a large factor. Comprehensive in your case is going to be a big impact because hail damage is based off of comprehensive. So when you pay that $100 or $500 deductible on that comprehensive coverage, you are getting that repair. Well, if comprehensive is the piece that's causing the most issues, then we need to raise the deductible there to see what kind of impact you could have. In some states, in some areas, it could be the liability limits. Just we're going crazy, we're injuring everybody, and that can be an impact. When you're getting your renewals, your agent should be going over what impacted your policy and what changes, if we need to make any, would we make to fix that issue. Now, the whole goal is not to get to the end of your policy 5 years from now and realize, oh my gosh, I got nothing covered. And I'm paying the same price, but now if I get in an accident, I'm out of pocket thousands of dollars. The point is to have you covered correctly, also to be able to afford it so that you can combine those two pieces. Knowing the coverages you want, need, and must have are 3 different pieces of insurance. And honestly, I tend to lean towards give you the quote for the coverages you should carry, and then let's look at options if we can't afford that. If it's too much and it doesn't fit the budget, the part that I find a lot of people don't realize is when you get the right company, right fit, the right coverage, a lot of times it's actually cheaper than what you're paying now. So those pieces can be impactful. The other way you can do this is to talk with your current agent and look at discounts. Maybe you're missing the alumni discount. Maybe you're a CPA, a teacher, a college student. You have someone away at school. All of the pieces that can play factors in discounts, whether you took a defensive driving course, your car has that new security system, the LoJack system and the OnStar, and all of the things that help. Maybe you do a telematics that watches your driving habits, and you can prove over the next 90 days that you're a good driver. I personally got $370 off of our bill every year because I did do a test and I showed them that I was a good driver. So there's a lot of pieces that your agent can help you work through to make sure that you are getting the right coverage. Again, if you are shopping, I'll put a link in the description below. The main thing that you should find out is what coverages you should carry. If you're not properly covering the right coverage, then what's the point of shopping? Let's figure out what you need first, and then let's take a look at other options. I've got my Car Insurance 101 here that'll go a lot more in depth. I'm Mark with Think Insurance. I'll see you in the next one.